Have you ever stopped to think about how an entire country, a whole nation, keeps track of its money? I mean, we're not talking about a simple household budget here. We're talking about a massive, incredibly complex system that has to manage every single dollar of public funds. So let's dive in and break it down.
Seriously, think about that question. It is huge. From every bit of tax collected, to every fine paid, all the way to building massive highways and taking out international loans, every single transaction has to be accounted for. So how in the world is it done? How do you responsibly manage a nation's wealth? Well, that is the exact system we are going to decode right now.
All right, here's our game plan. First, we're going to look at the big why, the whole philosophy behind it. Then, we'll get into the core rules of the game and what I'm calling the 3 money buckets. After that, we'll check out a major tech upgrade that totally changed everything. And finally, we'll meet the guardians who are tasked with watching over the entire system.
So, let's start with the most important part, the core idea. You have to remember, when you're managing public money, the goal is completely different from a private company. It's not about making a profit. Not at all.
And there it is right there. The number one priority is accountability. It's all about being a responsible steward of the nation's resources, making absolutely sure that every dollar is used exactly for its intended purpose. This single idea, accountability over profitability, is the foundation for everything else we're about to talk about.
Okay, so if your goal is accountability, how do you actually build a system around that? Well, in Malaysia, the answer is a really important concept called fund accounting. This is the central principle that governs all of the country's public finances.
To put it simply, fund accounting just means you can't throw all the money into one giant pot and hope for the best. Nope. Instead, the money is divided up right away based on where it came from and what it's legally supposed to be used for. This creates really clear boundaries and controls from the very start. You know, the best way to think about it is like this. Imagine you have separate savings jars at home. One is labeled groceries, another is rent, and another is vacation. You wouldn't just grab money from the rent jar to book a flight, right? Of course not. Well, fund accounting applies that exact same logic just on a national scale. It makes sure money that's meant for, say, healthcare doesn't accidentally get spent on building a new road.
So if fund accounting is the theory, how does it all work in practice? Well, this is where the rubber meets the road. It all comes down to what we're calling the 3 money buckets. This is where all that public money actually gets stored in.
So almost all government revenue goes into one big central pot. This pot is officially called the consolidated fund. But staying true to that principle of fund accounting, that big pot is immediately and legally divided into 3 completely separate accounts.
Bucket number 1 is the revenue account. You can think of this as the government's main checking account. It's funded by all the things we're familiar with: taxes, license fees, penalties, and it pays for the day-to-day running of the country. We're talking civil servant salaries, office supplies, and all the essential government services.
Our second bucket is the trust account. Now, this is where money that's being held in trust for a very specific objective is kept. This is not for general spending. It's for things like the Development Fund, which finances major national projects, or the fund that provides housing loans to public employees. The money in here is legally ring-fenced, meaning it cannot be touched for anything else.
And finally, bucket number 3, the loan account. This one's pretty much what it sounds like. It handles all the money the government borrows, whether it's from inside the country or from foreign sources. Its main job is simply to manage and repay those debts. Now, having these separate buckets is a great system, but how you record the transactions is just as important. And recently, Malaysia undertook a massive upgrade to its entire public accounting system, really pushing it into a whole new era of financial transparency. So the most crucial part of this upgrade was a huge shift from what's called cash basis to accrual basis accounting. See, under the old cash system, a transaction was only put on the books when money actually moved. The new accrual system, it's much, much smarter. It records revenue and expenses when they're earned or incurred, which gives a real-time, much more accurate picture of the government's finances. For example, it shows how much tax revenue the government is owed right now, not just what it has already collected. It's a game changer.
And this new accrual method isn't just a casual suggestion, it's the law. It's all governed by a very strict set of rules called the Malaysian Public Sector Accounting Standards, or MPSAS for short. Think of MPSAS as the official rulebook for government accounting. It makes sure that every single agency reports its finances in the exact same way,
which gives you consistency and accuracy across the board.
Of course, a new rulebook is only as good as the technology you have to enforce it. And that's where this system called IGFMAS comes in. This is the powerful, centralized IT platform that is literally the engine driving the entire modern accounting process for the government.
So what exactly is IGFMS? Well, it stands for Integrated Financial and Management Accounting System. But really, it's the digital backbone of public finance. It replaced a whole patchwork of clunky old systems with one single, mandatory platform that all federal agencies have to use. It handles the whole shebang, payments, payroll, assets, and it generates the crucial reports that make this new level of transparency even possible.
So we've got the rules, we've got the technology, but who actually keeps an eye on all of this? Who are the people and the institutions making sure the system works the way it's supposed to? Well, these are the guardians of the public fund.
And there is a very clear chain of accountability built right into the system. First, the Accountant General's Department prepares all the official financial statements. Then, the National Audit Department, which is led by the Independent Auditor General, comes in and audits those books. And they don't just check for accuracy, they check for efficiency too. Finally, their report goes to Parliament and the very influential Public Accounts Committee, or PAC, who scrutinize everything and can call officials to answer for exactly how public money was spent.
So when you look at the whole picture, the three funds, the modern accounting system, the independent audits, and that final layer of parliamentary oversight, it's all designed for one ultimate goal: transparency. It is a system built from the ground up to ensure the nation's wealth is managed right out in the open.
Now, this entire system is designed for accountability, but really, it's only as powerful as the questions that we, the public, ask of it. So now that you know how the money is tracked, which bucket it comes from, and who's watching over it, what does that make you wonder? What questions would you ask about how our public money is being spent?